The UK economy is in a state of low growth and high inflation, or stagflation, and that's why I bought an inflation-linked bond. So in this video, I'll talk about why I did that, but also how I did it. It wasn't easy. And also I'll talk about what I hope the reward is going to be. Now, don't forget, if you do enjoy our videos, please do like this and also subscribe to our channel. That way you won't miss any new ones. So let's look at how and why I bought inflation-linked bonds in a bit more detail. Let's begin with stagflation in the UK. Beside me you can see GDP growth in the UK going back to 1955, and notice how it breaks down into two phases. The first phase is from 1955 to the global financial crisis, where growth averaged 2.4%. Notice after that there was a kind of leg downwards, and we never got back to that long-term trend. Not only that, but the rate of growth also slowed down to 2.1%. Then we got the pandemic, which took a big chunk out of GDP, but we did bounce back, and now it seems to have kind of floundered again. If we compare growth with the United States, you can see that during the pandemic, the US also took a hit, but it wasn't as deep as the one in the UK. And if you look across G7, the other rich countries of the world, the pattern that you see is also one of a shallower fall and a more rapid recovery. And whereas US growth seems to have recovered, in the UK it actually seems to have leveled off, which is quite worrying. Turning to inflation, if we look at UK inflation relative to other countries, ours is now looking quite sticky. The latest UK print of inflation, as I make this video, was 10.1%. That's above the EU average of 9.9. It's well above Germany, France, and also the US, where disinflation, a falling rate of inflation, looks to be very clearly the case. Now in the UK, there's a lot of upward pressure on wages at the moment. So if we look at the real wage growth, you can see that there were long periods in the past when wages were falling in real terms after the global financial crisis. And we never really recovered from that. There was a period of real wage growth after the pandemic, which was quite significant, but now we've gone back to negative real wage growth. If we look at nominal wage growth, where we haven't adjusted for inflation, what's particularly worrying in the UK right now is that wage growth is very high in nominal terms. Now that's because of successful wage negotiations, but also a very tight labour market, as we'll see in a moment. Now the prospect of a price-wage spiral, where prices chase wages and wages chase prices, is actually a material risk in the UK. And that's partly because the UK labour market's very tight. The same's true in other countries, of course. But if we look at the number of vacancies, job vacancies per unemployed person, that's at a very elevated level in the UK right now. It has come off its peak, but still remains elevated. I think part of the problem is that if you look at the number of economically active workers in the UK, that's this red line, that seems to have plateaued. So we're not getting any new workers entering the market. And yet at the same time, the number of jobs, the number of available jobs, has actually increased upwards very rapidly. So we've got a fixed pool of labour, which is static. We've got increasing jobs, which those workers could do, but we can't satisfy that demand for workers. So of course, having greater demand for workers than supply of workers pushes up the price of labour. And that means in the UK at least that we're going to have an upward pressure on wages, and that could make inflation yet more sticky. If the economy is in a state of stagflation, how can we deal with that as investors? Well, previously I did a video about the investment clock, as it's called. Now all this does is to arrange growth and inflation onto the two axes of this graph. So you've got rising inflation towards the right, falling inflation towards the left, rising growth going upwards and falling growth going downwards. So we're pretty much in this bottom right quadrant, which is stagflation in the UK. And in the fixed income space, the best place to invest in that kind of environment is in inflation-linked bonds. So that's why I decided to buy inflation-linked UK government bonds, or Gilts. And these are also called linkers. And this is the inflation-linked bond which I bought. Now you can think of the certificate beside me kind of like a birth certificate, which was issued by the UK Debt Management Office. It publishes one of these for each of the bonds which it issues, and of course the whole point for the existence of this bond is to raise money for the Treasury. In this case it raised £1.5 billion. Now, the birth date of the bond, the issue date, was October 2012, and the maturity date of the bond, when people get their money back, that's in March of 2024. In the interim, this thing's going to pay a very small coupon, and the percentage of the face value of the bond, which the bond pays every year, is just 1/8%. It's absolutely tiny. However, what's special about this bond is that it's going to be linked to the rate of inflation. So notice this reference index, this very large number at the bottom here, because that's going to crop up later on. It's very important for this bond. So let's pretend initially that this is not an inflation-linked bond. This is what the cash flows would look like if that was the case. So for a normal gilt, what you'd get is you'd pay £100 for the bond on day one when it's issued. This was in 2012, and that was on the issue date of October the 12th, 2012. Then at maturity on March the 22nd, 2024, you'd get your £100 back and you'd get any final coupon that's paid. Now, between the issue date and the maturity date, you're going to get very small coupons. These are paid every 6 months, so you get half of that 1/8%, so 1/16 of a percent every 6 months. And 1/16 of a percent of 100 is going to be 6¼ pence every 6 months. Now, I only bought this bond on March the 14th of this year, so I'm only entitled to the final 1, 2, 3, 4 coupons and the return of the principal. But you can probably guess the one I'm really interested in is that return of principal, because that's the really big cash flow. The coupons are almost zero. But because this is an inflation-linked bond, these are not the cash flows that you actually get. And that's because of something magical called uplift. The whole point of inflation-linked bonds is that the principal and the coupons rise in line with inflation. And what we care about is the cumulative rate of inflation since the issue date of the bond. Now, it's not CPI inflation which these bonds are linked to. There was discussion of moving it to CPI, but for now it's still RPI, retail price inflation, which is also published by the ONS, the Office for National Statistics in the UK, and you can see the rate of that year on year going back to before 1990. Notice that at the moment it's 13.5%, which is considerably higher than the 10.1% for CPI inflation. Now, to actually work out the amount of uplift, how much the cash flows increase over time, is not easy. It actually comes with a lag. So you actually look back 3 months, 3 calendar months from the date of the cash flow to the value of RPI to work out what the uplift is relative to the date on which the bond was issued. Now, if the cash flow doesn't fall on the first calendar day of a month, then you have to do an interpolation, which is quite complex, but it depends on something called a reference index, and that's for the first calendar day of the month in which the day falls for the cash flow, and the index for the first calendar day of the next month. And you round it to 5 decimal places. So immediately you can see why some people are reluctant to buy inflation-linked bonds. They are quite technical. But the other key point here is that for the future cash flows, I don't know what I'm going to get. If I buy a normal government bond and I hold it to maturity, I know precisely how much my cash flows will be and precisely when they'll be paid. In contrast, with an inflation-linked bond, you don't know what this reference index is going to be in the future. You've just got to guess what the rate of inflation will be. So in that sense, you're kind of leaping into the unknown. If inflation's more than expected, then you'll get more money. If inflation is less than expected, you'll get less. But the key point is that whatever inflation is, RPI inflation at least, it'll be linked to that index. Now, our PensionCraft community get access to a range of trackers, and one of them is the macroeconomic tracker. This is what it looks like, and I've recently added several new tabs specifically for the UK. So I've now got UK gilt yields. Those are often difficult to find. So if you do buy single nominal government bonds, this is the yield you'll lock in. And at the moment, you can see that those have risen quite sharply. From the point of view of linkers, the interesting tab is inflation. So you can look at UK CPI inflation, which you can see is very high. You can also look at the tight labour market. Unemployment's very low. But if you're going to buy inflation-linked bonds, something called break-evens are very interesting. This tells you what inflation has to average over the life of your bond in order to make an inflation-linked bond worthwhile. In other words, what rate of inflation is baked into the price already. If you think inflation will exceed that, then it's worthwhile investing in an inflation-linked bond. And when I did that for the UK, I certainly thought that it probably would be worthwhile. So if you want to get access to this and you want to learn more about becoming a member and getting access to our chat application so you can talk to me and other members of the community, but also a growing list of explainers, including one in more detail on buying this linker, then just click on the link in the description below or just go to PensionCraft.com. Now, as I say, I don't really know what the rate of inflation is going to be over the remaining life of my bond. So this is my guess as to what that return will be. So this is the cumulative uplift for my bond since it was issued in 2012. Now, this factor starts off at 1. Initially, there's no uplift because there was no inflation. But then as we get each of these coupons every 6 months, notice how gradually we accumulate greater and greater uplift. So the coupons would be gradually increasing, such that by the time I bought the bond, this was in March of this year, the uplift was about 50%. Now, if we look at those recent cash flows, the rate at which the cash flow has been growing, the rate of growth of uplift due to RPI every 6 months, were these numbers. So you can see as the rate of inflation soared, then we've recently reached about 7 or 6% annual growth in prices. So what I've simply had to do is assume that inflation will decelerate as the Bank of England says it will, but because it's sticky, I think that'll happen quite slowly. So my educated guess for the remaining 3 6-month periods is we're going to get 6%, 3% and 2% increase in RPI for every successive 6-month period. Is that just a guess? Yes, it is. And if that's the case, these are the cash flows I'll receive. I bought the bond when it had an uplift of about 50%, so I paid about 150, and on the redemption date, in about 1.5 years, I'm going to receive about £166. There'll also be some tiny coupon payments, 3 of them. Each of them will be about 10 pence, plus a final 10 pence coupon on the redemption date. If we combine all those cash flows, I'm going to get an internal rate of return of about 7.6%, which isn't too bad. But the critical point is that this will keep up with the rate of inflation in the UK by definition. Now let's see the actual process of buying a linker, and it was not easy. In order to do this, I opened an account with Interactive Investor, which offers single gilts, but also single inflation-linked bonds. And I put it inside an ISA, so I don't have to worry about capital gains or income. In fact, for UK gilts, you don't have to pay capital gains anyway. Now, while I could buy a gilt via the usual web interface, just as you would for a stock or a fund, I couldn't do that for my linker. So I actually had to call them up. And right now I'm going to show you what that call was like. They just basically throw a huge amount of information at you, and you've just got to be absolutely clear as to what the price is to expect. But the lady that did it was very good, I have to say.
To buy or sell stock, press 1. To cancel a trade, our advisors are working hard to answer your call as quickly as possible. Hi there, you're through to Lois at Interactive Investor. Could I start by taking your account number, please? And how is it I can help today?
Well, I was hoping I could buy an index-linked treasury.
Have you got the symbol for that, please?
Yes, of course, it's TR24.
We can get that done. So did you know the cash amount or the nominal amount that you wanted to buy?
Yes, could I buy £5,000 worth, please?
And that'll be attempting to buy or attempting to invest on your behalf £5,000 in the Treasury United Kingdom government of 0.125% index link SNR 22nd of the 3rd 2024 GBP gilt symbol TR24, and that'll be at market best at the web commission of £5.99, and if executed that will be dealt on a T+2 working day settlement. Are you happy to go ahead with that?
Yes, please.
No problem. Is there anything else I can help you with whilst I...
No, but you're going to be famous because you were recorded on my YouTube channel. So, congratulations.
Yeah, that's great. Thanks for your time today.
Great. Thank you very much for your help.
No problem. Take care.
Take care. Bye-bye. So if you do agree with me that the UK is in a state of stagflation and likely to stay there for some time, then perhaps a linker would make sense for you too. All I'd say is make sure you understand it before you buy it. Never buy something which you don't understand. But also, you don't know what you're going to get because the rate of inflation is unknown in the future. Now, don't forget our offer. If you want to join our membership, There'll be a link about that in the description below, or just go to PensionCraft.com and you get access to chat and lots of members only videos, including one at length on how to buy a linker. So as always, thank you for listening.